We've got two pretty important things to talk about regarding Tesla. Number one, killer robots attacking people and pinning them down. What? And then, of course, we've got to talk about the real story here, which has to do with the Cybertruck and some hidden benefits that could be generating passive income for the owners of Cybertrucks, which will become a lot more apparent in time. That could end up being a catalyst for the stock, as well as a convincing justification for you to tell your wife why you want to buy a Cybertruck even though you don't need it. Yeah, in this video, I'm actually going to show you the math behind how the Cybertruck could pay you passive income of $200 or more per month without renting it out to anybody else. We're going to talk about that. But first, a very quick note here on killer robots. The Daily Mail literally uploaded a thumbnail of the Tesla Optimus in front of Cybertrucks, and then the headline, Tesla robot attacks an engineer at the company's Tesla factory during violent malfunction, leaving a trail of blood. Okay, well, what I'm gonna do is I'm gonna go to ehack.com, where I prefer to get my insights. Oh wait, that's actually the stuff that I write. This is our website for providing our research and news and commentary. And before we get into the Cybertruck part, worth noting right here that the Daily Mail actually wrote this to talk about one of these robotic arms that had a malfunction in 2021, and that no other robot-related injuries were reported in either 2021 or 2022, though maybe more injuries are going underreported even though they occur, they allege. So basically, the Daily Mail is trying to use the Optimus as a way to clickbait some kind of big takeover of robots that want to basically kill you. And it's not actually happening, because when you talk about the story literally has nothing to do with the Optimus robot. They don't even talk about the Optimus robot in the story. That's just how they're trying to lead clicks. Kind of sad day for the mainstream media, but not unusual, which is why I love what we're doing over at ehack.com. Totally free website, free forever for you to go learn more about and give me your feedback on in the comments down below. All right, but now how does the vehicle actually save me money? Okay, well, there are two ways. We already know about the easy one. The easy one is the 179 deduction. I want to talk about the new one. The 179 deduction, just to catch you up to speed really quick. Let's say you buy this car, this vehicle, it's over 6,000 pounds. Obviously right now it's like $120,000 for the Founders Edition. This is hard to justify. This is going to be a lot more of a delicious calculus once the car is like $70,000 and you have the lower or less expensive vehicle versions. But anyway, you buy it now for $120K. You write off $25K plus one of your 7 years of straight line depreciation. Your first year of owning this vehicle might actually exceed your down payment if you finance it. You might save $15,400 on the vehicle year one if your tax bracket is 40% and you're writing it off for business, which is kind of cool. And then you might save an additional $5,400 a year on the vehicle, just in tax savings. Of course, confirm this with your CPA, which is like $450 a month by owning the vehicle. That's pretty cool. I mean, that's just depreciation though. So check that out along with some of the accelerated depreciation you might be able to take. But what I think is actually a lot more cool and will be a lot more applicable to a lot of people in the long term, and is super underrated when it comes to analyzing Tesla, is vehicle to home charging. And here's how vehicle to home charging could generate you over $200 of passive income per month. First, it's worth noting that the vehicles offering vehicle to home charging right now are the Volvo EX90, the Chevy Silverado, the Tesla Cybertruck, and the Ford 150 Lightning. Now, there are expected to be others that offer the bi-directional charging, like these here in yellow. There is also the Volkswagen ID4, which does offer vehicle to home charging, but this one's labeled slightly a little bit differently. And let's just focus on the Cybertruck for the purpose of this video. Oh, we got the Kia EV9 over here. You can take a look at this right here to give you a little bit more of a breakdown. But what I'd like to do is understand this. When we pay money for our utility bill, our electricity bill, which the average throughout the United States is around $170 a month, we pay with what's known as after-tax money. Okay, now to understand this concept, you have to first understand taxes. When you go make money, you pay taxes, and then you could pay for after-tax expenses like your electricity bill at home. So for example, let's say your electricity bill is $180 a month, okay? And you pay 40% in taxes on average. you would end up having to earn $300 to pay $120 in taxes to be left with $180 for your electricity bill, right? So consider this when it comes to evaluating the Cybertruck. All of this in detail over here at ehack.com. Consider this. Let's say peak utility rates are now, which they are, 4 to 9 p.m. when the sun is lower and solar isn't as effective. Average peak utility rates are around 40 cents throughout the country, roughly. Average usage during this time could be, if you use power during 4 to 9 p.m. like most normal folks do, could be somewhere around 5 kilowatts an hour. It works out to about 25 kWhs. Now let's say your Cybertruck has that spare, which quite frankly, you probably do. You plug in the Cybertruck and you run the Cybertruck as your home's power source automatically. It's all done automatically. You don't have to think about it through the app. For 5 hours at 5 kilowatt hours. Okay, that's 25 kWhs. Now you're going to recharge at about a 17-cent discount in the middle of the night. That would generate roughly 17 cents times 25 times 30 for a monthly figure, $127.50 per month just by moving your peak hours onto the Cybertruck's battery during peak time and then getting that power back, that energy back, in the super off-peak times in the middle of the night. Now, obviously, these numbers are going to vary. I'm not using very expensive California numbers. I'm trying to use across the country averages here, right? But not including any other offsets. If you're in a 40% tax bracket here, saving $127.50 of electricity is actually kind of like earning $212 of passive income per month. So literally, that's like somebody coming to you and going, here, man, here's $200 of passive income. And then you pay a little bit in taxes, and you have $127 left to give to your utility. That's how the Cybertruck can actually save you money in a way that a lot of folks aren't even considering about it yet. But I'm not even considering about this from the point of view of, like, should you actually justify buying a vehicle that's $120,000 just to save a little bit here? No, of course not. And there are other considerations as well. Like, in the future, the vehicle will be less expensive. Then it'll make more sense. But you might not be a high energy use user, and you might not have the car available during that time, unless like you're a crypto miner or a YouTuber. And quite frankly, we don't know yet how much this is going to affect the longevity of the battery. You might have some battery depreciation by doing this. That would offset some of your savings, right? So now, for like the way I look at it is, for me, it would probably be a boon for people like me because I'm a high energy use user and I'm home a lot. But I could have this same benefit a lot cheaper just by buying Tesla Powerwalls or Enphase battery packs because they would cost me a lot less to get the same kind of benefit. But buying batteries is not sexy for your house. Buying a Cybertruck is. So is it possible the justification for buying a Cybertruck could start including the calculus of savings from vehicle to home charging? The answer to that, I believe, is yes. But it's not just now, the fringe going, oh yeah, I'm going to save some money with my Cybertruck with vehicle to home charging. It's actually when this goes mainstream. Imagine you buy a $30,000 car. A $30,000 car at a 3% interest rate. Like in the future, okay? This is where it becomes a catalyst. And this is my point. It's not the now. We're going to go here. Let's do this. Car loan calculator. All right, ready for this? Let's go do an auto loan calculator. We'll just go to a website over here. Let's say I buy the $30,000 Tesla. In the future, we'll finance it at 72 months, and let's say rates are lower, they're 4%, okay? And I'm gonna put $5,000 down. Great, that's like what, 15-ish%, a little more than 15%. We'll get our sales tax in there, great, calculate. Okay, so what is my payment on this sucker? My monthly payment is $391. Assuming I don't use that for business, that's all an after-tax expense. But if I can offset half of that, I might literally have 50% of my Tesla car payment covered simply by being able to plug this sucker in and using it to support my home's peak energy use during the middle of the day. Again, this is a few years out, right? You got to get new Tesla, like Model 3s allowing vehicle to home. People have to pay for the inverters. But in the future, people are going to have the inverters. In the future, it's not going to make sense to have a gas car anymore because your monthly payment might literally be half of the equivalent of a gas car simply because of vehicle to home. Okay, and this is not even comparing to the catalyst that I was cheering this morning from Morgan Stanley, actually. So Morgan Stanley's Adam Jonas updated his Tesla thesis, and he didn't really tell us much new, but there was one thing that I thought was really, really interesting. He suggested that Amazon Web Services drives 70% of earnings before interest and taxes at Amazon. And they think this could happen with Tesla's Dojo as well. So then I'm like, So I dug around. I went into Amazon's 10Q and I'm like, oh, how interesting. AWS brings in $20.5 billion per quarter with $5.4 billion in net. That's actually really impressive. That's a 26.3% net on cloud services, which is really, really fantastic. I actually wrote here, congratulations, Amazon. This is amazing. This is like totally an understated consideration for Dojo. Because remember, this isn't Dojo or NVIDIA, right? This is not Amazon or NVIDIA. Like Amazon has its own chips and they use NVIDIA chips. Your goal is just to create a server factory, basically, and then compete in what I consider to be this oligopoly of very few companies that can actually provide large-scale cloud infrastructure for cloud compute and cloud storage. I personally thought about getting into cloud infrastructure because I think there's a lot of money to be made there. The problem is cybersecurity. That's your greatest threat. So cybersecurity isn't great with smaller companies, potentially, or I think you have less money to potentially fight the risks, right? So does that mean in the future, there will be few, dare I say, instead of OPEC for oil, like an ODEC, an operation of data exercising company? Okay, it's a really bad one, okay? But I came up with something. The point is it possible that very few, like Microsoft, Google, Amazon, Meta, and maybe Tesla as well, could end up fighting for that margin and that profit? Yeah. Now, am I gonna price that into my price? No, not at all. Do I think of it as icing on the cake? Absolutely. Do I think of vehicle to home as icing on the cake? Absolutely. Is it going to take a long freaking time for people to start understanding that vehicle to home charging is actually going to save them money, like pre-tax money? Yeah, it's gonna take a long time. Most people don't even know the freaking difference between post-tax and pre-tax, and the fact that when you pay your electricity dollars, it's post-tax money, man. Most people don't realize when you save a little bit on your electricity, it's actually like, instead of saving $1, you know how they say like a penny saved is a penny earned? No. It's like a penny saved is like 1.4 pennies earned, roughly. To make $1, you have to divide it by 0.6. It's actually like saving 1.67 pennies, right? So think about that. 1.67 pennies times 0.6, which would be my after tax, is $1. Yeah. So every penny you save is like earning a penny 67. That's why after tax and pre-tax considerations are really important. Vehicle to home charging does that. It saves you money where it's actually more useful money to save. That's pretty cool. Now, I teach that kind of stuff in my courses on building your wealth. We got new Gold Course lectures coming out here at the end of the year. I'm obviously biased towards Tesla as well. I hold Tesla in my ETF, and I own Tesla myself. So I'm a big Tesla bull here, but I'm not pricing any of this into my trajectories for Tesla. I'm looking at this more as like, here's what the mainstream media is talking about, killer robots, and here's what Meet Kevin's talking about. Wow, look at the future we're going to go into. A future where Tesla could potentially compete in data centers, but more interestingly, every person might end up offsetting their peak energy use by plugging in their electric vehicle and arbing the difference. Yeah, that is very interesting. Anyway, thanks so much for watching. We'll see you in the next one. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.